Facebook, or Meta stock, is up nearly 25% right now following their fourth quarter earnings results. In this video, we're going to talk about their earnings results as well as a framework to think about where does Meta stock go in the quarters and years ahead. If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing. If you enjoy educational investment videos, please make a point of hitting that subscribe button. So let's understand what's going on here with Meta stock, which is ripping higher today. So first of all, their fourth quarter results were not great. You know, that it's a really important point. Like the fundamentals here, not great. You know, you're looking at a 4% revenue decline. Now, some of that was from, currency headwinds because it's a global advertising business. You're looking at a huge drop in underlying profitability, a 50% drop in, operating profit. Now, part of this was from, short-term, one-term write-offs in terms of some of the infrastructure investments that they've made. And then on a full year basis, it's not that much better, a 1% decline, a 38% decline in profitability. This is not what you want to see, folks. And so this might get you wondering, well, why is the stock rallying, if these fundamentals weren't that great? Well, when you look into their fundamentals, you actually see that, you might go, well, wait a second, is this decline just because of their huge investments? I know, Zuckerberg's gotten really excited about, the metaverse, and maybe he went overboard on that. And maybe that's what's driving the entirety of this drop in profitability. And the reality is that's not the case either. They're making huge investments in artificial intelligence, and you could see that their profitability in their family of apps, which is, really their advertising primarily business, that profitability also fell. So yes, they are making record investments in Reality Labs to the tune of $4 billion during the quarter. So huge, over $10 billion during the year. But their profitability in their family of apps on a year-over-year basis was also down significantly from, around 16 billion to around 11 billion year over year. So this business is facing real challenges. This is not, a clear picture of like, oh, this is going to be great. So then you might go, well, why is it rallying? Why is Facebook stock or Meta stock doing so well? Well, a couple of different things that sort of feed the bulls here. One of which is that their users, in terms of engagement, you're looking at near record highs. You're talking about daily active users hitting a new record, 2 billion daily active users on the Facebook platform. And for all those folks that are saying, never Facebook or delete Facebook or what have you, the numbers just don't suggest that, because you look at US and Canada, you're making new highs now at nearly 200 million. You look at Europe, and, Europe's starting to claw back. Now, they did have an impact from the Russian-Ukraine war that you saw in 2022, but starting to bounce higher. And then you still have continued strong growth with the rest of the world in Asia Pacific and rest of the world. So the daily active figures that you're seeing with Facebook continue to be quite strong. And this is what you're going to want to see with this type of business. This is an advertising business. So you need to have the users coming in. You need to get that engagement. You need to get lots of impressions. And you see Reels is doing really well as well. Reels has been taking off, and that's their sort of short form video, try to compete with TikTok. So you see engagement, you see Reels. So what they're doing to get folks to tune into Facebook, to check into the app, is working. Now, there's some headwinds here because Reels doesn't monetize at the same rate as, let's say, their feed, historical pictures versus short form video. So there is some sort of monetary pressure that you're seeing there. So then it becomes a question is this a smart investment, because you're retaining users for the long term, and you might be sacrificing some of your revenue in the short term, because let's say the advertising revenue that you'd get on feeds would be much more attractive than what you'd currently get on Reels. So that is an important data point to consider, and part of the reason why they're having this headwind. Another key aspect, and this is a really, really important point for turning around Wall Street sentiment. And I personally was also ambivalent, about Facebook or Meta looking at it last year, even though the stock fell at one point below $100, is because you saw Zuckerberg sort of plowing ahead into their metaverse investments, despite the fact that their core business profitability was not growing as fast and actually was starting to decline. And so now he's starting to talk about a year of efficiency. So that is music to Wall Street's ears, because they're saying, wait a second, this is previously a company where for one quarter their free cash flow got close to zero. And so now it's, oh, okay, you're getting back to a free cash flow generating business. That's what we want to see. Year of efficiency, effectively making do with less, instead of making these huge tens of billions of dollars infrastructure bets that they're still going to do, maybe they can trim a bit. And they did call that out in their outlook, saying, hey, we're going to pull back what we're expecting in terms of how much we're going to spend on both operating expenses as well as capital expenditures. Now, part of that might be having a new CFO. So good for them in terms of changing up the CFO. And so having a year of efficiency, that's a big deal. That gets Wall Street excited, saying, hey, you're going to start thinking about things from a return on investment perspective. That is what we want to hear. And then a final key component that really gets bulls excited is, oh my goodness, a $40 billion buyback. Isn't that wonderful? They have around $40 billion in terms of cash on their balance sheet. I mean, they could do this right now if they wanted to. So we'll see how they deliver. Personally, I'm a little skeptical seeing that because they actually spent significantly less on buybacks in 2022 versus 2021. Around $28 billion versus $45 billion. And the share count last year was only down between 5 and 6% last year. So this, in my opinion, Zuckerberg should get some points for some of his past really intelligent acquisitions. Really get a lot of credit for paying, having the foresight to say, hey, I'm going to be able to grow Instagram significantly in the future and I can pay, $1 billion or something like that. And it'll just be tremendous. It'll create tremendous value going forward. But what they did with the capital allocation over the last 2 years, in my opinion, reflects that they didn't really know what's the fair value of their stock. And that is concerning for me. And that's part of the reason why it's not part of my journey. Looking at Meta is because I want a CEO that understands, okay, when the stock falls below $100 a share and you think it's compelling and you believe in the business, you're actively going to be plowing more capital to work to buy back stock. And the fact that it was the exact opposite, that they were plowing capital to buy stock when it was expensive, or when it was much more richly valued, I should say, versus what happened in 2022, that's a big red mark in my opinion. I don't want to see that from management. And that, now maybe you might chalk it up to say, oh, that was the past CFO. Let's not think about that as applying to Zuckerberg. Personally, I think it's under Zuckerberg's watch. So, he should, take credit, responsibility for that. Okay, so what do I think happens to Meta stock from here? First, if you're looking to take charge of your investment journey, consider unrivaledinvesting.com for compelling investment ideas, real-time portfolio updates, and our exclusive Discord server available for annual subscribers. I also recently launched 2 new investment courses for enterprising investors. One talks about how do you analyze financial statements. The other is how to value stocks. That way, a lot of folks got burned in the last few years paying too high of a valuation. So now it's like, hey, how can you think about valuation? Full disclosure, this is not financial advice. So why is Facebook rallying? I think a key component of this, and this is a chart reflecting Meta's next 12-month earnings, is that the valuation just got really low. It got to low teens consolidated earnings estimates for where it would be, in the year ahead. People were saying, wow, this only trades at, nearly 12, 13 times forward earnings. And that's as cheap as it got. This is, below $100 a share at one point. And now what you're really seeing is valuation rebounding. People saying, wait a second, this is a business that has 2 billion daily active users, at least on a monthly basis. You're talking about closer to 3 billion monthly users. You're going to be able to serve a lot of ad impressions to these folks. And this will create, real favorable economics over time. It might be lumpy, it might be bumpy, but you're going to see some sort of rebound here in valuation. That's really a key driver here. Now, once again, it's super important to tie everything back to fundamentals. Like, this quarter was not a great quarter for them, in my opinion. It's all these other things that cause the stock to rebound, like the valuation being cheap. That's a key aspect for why it's rebounding. It's just that sentiment was so dire. But looking at their outlook, it's still not great. They're talking about revenue for the first quarter of $26 billion to $28.5 billion, talking about a 2% foreign currency headwind. They're still penciling out -7% to +2% revenue for the first quarter. They're talking about lower expenses for the year, but still not talking about returning to a growth situation. In my opinion, this is really where fundamentals are going to drive the share price Meta. And this is why it's so important to think about fundamentals and have a strong feeling on where you think the fundamentals will go. I look at Meta, and it's a little too hard for me to have conviction to say, hey, I think that the fundamentals are going to compound, let's say at 5 to 10% going forward. They might very well, but I look at this picture where they're talking about -7% to +2, if they post anything even close to that for the first quarter, I think you're talking about the stock resetting, going back to or dropping significantly if you're still looking at a business that's declining, let's say 5% plus in the first quarter of 2023. That would be my own personal expectations. But if they're able to deliver better than this framework and they're able to deliver, let's say, closer to 4, 5, 10% revenue growth, we'll see. They're not there yet. As I called out, they declined this past quarter. They are not out of the woods. They need to prove that this business can keep growing from here, and that this isn't, like you have user growth that's slowing down significantly. How many daily active users can you get? There's 2 billion right now on Facebook alone. So what's sort of the growth driver from there? So as I think about the valuation framework, and this is a hypothetical valuation framework for Meta, and of course stock price can go way higher, way lower. A lot depends on how they execute, in the year ahead. I'm focusing purely on their family of apps. I'm excluding their investments in Reality Labs, which is huge, and saying, well, even if you just focus on this core aspect of the business and where their margins historically were, maybe this needs to come down a bit, but, and so I'm still tweaking that. But you're talking about somewhere around a low teens earnings for their family of apps, their advertising business. And then if you think this business can get back to growth, and this is a key aspect, if you think that this can get back to, let's say, high single-digit growth in the years ahead, if that's possible, that you can get to growth this year and the years ahead, then I think the valuation expands and people say, hey, this business should be worth at least a high teens earnings multiple. And then you can have over 100% upside, plus whatever cash from that's getting returned to you via buyback. So you could have a tremendous return from here. You could easily see Meta stock up over $400 a share if they're able to execute with this type of situation where they're able to actually prove their growth. But if they are not growing and they're not able to execute and they continue to face challenges, like I look at the current market and I'm just thinking to myself, they're losing market share. When you're reporting a decline like that and you see other advertising platforms post positive growth, that is not favorable for Zuckerberg. That is not favorable for Meta. So I think this is a challenging picture for them. They need to prove it from the execution perspective. And I look at how they spent, tens of billions of dollars on stock that was much higher. That was just another red mark that, hey, when the stock was at its deep cheap valuation below $100 a share, that they weren't stepping up. That is just even more concerning to me. So in my opinion, it's in the penalty box until you start seeing consistent proven execution. And I'd rather look for something that is less dependent on, let's say, the advertising industry. Advertising industry, generally will do well over time. If you're staring into a potential recession, though, it could come under significant pressure. That's another real concern. So I'd rather find some things that even if you're facing a recession, the business is hopefully more stable or recurring in revenue. And that's, those are the types of ideas that I'm personally looking for my own investment portfolio. I call them out at unrivaledinvesting.com. But clearly looking at Facebook and Meta stock right now, if there's execution, and I'm saying 3% on the low side. If they don't deliver 3% on the low side, then I think the stock could go, lower very clearly, even though I'm saying effectively flat if they get 3% and they get a low teens earnings multiple. This really depends on, will they execute in the quarters and years ahead? Will they get to 40% profit margins for their family of apps business? It's currently below that, historically been above that. So how will they deliver, in the quarters and years ahead? That's the big question mark. At this point, I don't have super strong conviction, but a bull that has strong conviction on their operating results could say, yes, I can pencil out a case easily for 100% plus upside. So I understand that perspective. If this video has been helpful for you, talking about Meta, the range of possibilities, why some bulls could continue to see upside, why the stock is up from now, even though arguably they didn't post really great results. If this video has been helpful for you, please make a point of hitting that subscribe button. Thanks so much for watching Unrivaled Investing.